Over the coming months, Malaysia's tax landscape is set for another major reset. The Finance Bill 2025 and the new measures for the collection, administration and enforcement of Tax Bill 2025 will not only tweak existing laws, but could change how tax is assessed, collected and enforced for individuals, SME and even large corporations alike. Today we break down what's really changing, who will feel it the most and what business and high net worth individuals should be doing now before these provisions kick in. Ready with me in the line to discuss further is Tanish Kana, Executive Director at Tratex Sedang Berhad. I want to say thank you very much, Tanish, for joining me. Firstly, what are the most significant changes proposed under the Finance Bill 2025 and the measures for the collection, administration and enforcement of Tax Bill 2025? And most importantly, who will be most affected? Individuals, SME or even large corporates?
Good morning, Nina. The biggest impact is on capital gains tax. Of course, in addition to the 2026 budget proposals, which was already announced on 13 October, there are additional measures in the Finance Bill and the measures for collection, admin and enforcement tax bill. And I would regard the most key is in relation to capital gains tax, whereby it has been clarified that liquidation, winding up, striking off of a company is in scope for CGT filing and CGT exposure. And number two, preference share is an increasing trend both among startup companies as well as for interco transactions. So now redemption of preference share is in scope for capital gains tax, and even conversion of preference shares into ordinary shares is in scope for capital gains tax. So those are some of the major updates on capital gains tax. The other aspect is a nominee shareholder. So as we know, capital gains tax applies only when the disposer is a company, limited liability partnership, trust body or cooperative society. But we have a lot of situations where the legal owner is an individual, but he's acting as a nominee for a company. So the Finance Bill changes clarify that in such situation, capital gains tax will apply because we look at the beneficial owner being the company, despite legal or nominee owner being an individual. So those are some changes on the Income Tax Act in relation to capital gains tax. Another key change is in relation to RPGT, real property gains tax, whereby in the past, losses arising from disposal of real property were allowed to be carried forward indefinitely. Now a 10-year time limit has been set. In line with the time limit for Income Tax Act, RPGT Act also has a 10-year time limit for carry forward of losses. After that, the losses will be disregarded. There's also another simplification measure on RPGT, whereby following the spirit of self-assessment, if the disposer of real property files the RPGT return within 60 days, they're able to notify the acquirer to reduce the withholding tax amount to the actual tax amount so that we can avoid instances of refund and better cash flow and so on and so forth.
All right, that's some of the updates from the income tax, also the capital gains, or we can also, one of the other tax was nominated shareholder tax. But maybe share with us, Tanish, when will all of these changes take effect? And are there any transitional provisions that taxpayers should be especially aware of?
Okay, the changes that I described earlier applies either from 1st January 2026 or YA 2026, depending on the exact nature of the change. There's one more change, which is for corporate tax installment, corporate income tax installment. We now pay the installments from the second month of the year until the first month of the following year. There is an effort to streamline that so that all installments will be within the same financial year. For that measure alone, the effective date will be from YA 2027, and YA 2027 is a transition year with 11 installments, and subsequently to become 12 installments within the same financial year.
All right, that is the expected date from 2026 to 2028. Dinesh, what are some of the new powers or tools being given to the tax authorities under the Collection, Administration and Enforcement Bill, and how might this change the compliance and audit landscape for taxpayers?
One of the important changes is in relation to stamp duty. Stamp duty is on a self-assessment system from 1st January 2026. This was already passed in the finance bill tabled in end of 2024, right? This change was enacted a year ago. What the stamp duty self-assessment system means is there's a lot of responsibility for duty payers, industry players to assess the nature of document, the right type of duty before submitting for adjudication or stamping. Now, what happened in the finance bill or the Collection, Administration and Enforcement Bill tabled in the Parliament last week is streamlining of penalties in relation to stamp duty in order to ensure that duty payers and industry players do not take responsibility under the self-assessment regime lightly.
And we know the amendment is to streamline and align and increase efficiency. How will the amendments to the Income Tax Act, Real Property Gains Tax, Stamp Act, Labuan Business Activity Tax Act and Petroleum Income Tax Act impact key sectors such as property, Labuan or offshore businesses and oil and gas?
These measures are quite meant to have across the board impact with regard to compliance level for stamp duty. RPGT and capital gains tax is specific for persons involved in capital transactions, and it has an impact across all sectors.
Help us understand from this two new bill. Do this proposal broaden the tax base, increase the effective tax burden, or mainly tighten enforcement, and how fair are these changes across different income and business groups can understand all of this?
Okay, for the main changes in relation to CGT and RPGT, actually, if you look at the explanatory notes, it's been characterized as a clarification in nature. So it is to further strengthen the views that IRB has always had, and it's meant to bring about clarity rather than a new policy.
All right, we know that this year we are the ASEAN Chairmanship. Take a look at the regional prospect. Maybe you can share with us what are the likely implications of these tax changes on Malaysia's investment climate and even competitiveness, especially compared to other ASEAN jurisdictions?
So this simply means that inbound investors have to be more conscious about the potential exit tax implications at the time of making the transaction investment. None of these measures are exceptional or something that are not present in other countries. It's in line with the norms. It simply means there are more factors that have to be taken into account when making investment decisions, transactions, and so on. So far, there are more factors to take into account. Nothing that falls out of the norms from an international point of view.
Lastly, practically, Dinesh, what should businesses and high net worth individuals start doing now to review their structure, manage risks, and even prepare for the implementation of these bills?
You have to start to plan in advance for capital transactions such as disposal of shares or even issuance of new preference shares, or subscribing to preference shares, redeeming, converting preference shares, disposal of properties, or even acquisition of properties. You have to think about the tax implications at the time of making the investment. So advanced prep is needed for capital transaction. And of course, stamp duty has impact on all areas of the business. I would say as simple as signing a NDA to an employment contract to a large-scale merger acquisition transaction.
All right, definitely I want to say thank you very much, Dinesh, for helping us understand the Finance Bill 2025 and the new tax enforcement and what it means for taxpayers and how will it change tax in Malaysia moving forward. Again, I would say thank you very much to Executive Director at TriTax, Sodiam Berhad, and all of our discussion here will be featured in astro.awani.com and across all social media platforms.